5 days from now, at exactly 8:30 on Friday morning, one number settles the biggest fight in finance. 3 Fed officials say money should cost more. The market says they're bluffing. Bitcoin spent the weekend too scared to pick a side. And the referee, the July jobs report, walks in Friday. Last month, that number missed so badly it stunned everyone. This Sunday briefing is your map to the week that decides. Here's the timeline. If you've been with us since Thursday, you know the story so far. 3 chapters. Chapter 1, the revolt. 3 Federal Reserve officials voted to raise rates, the biggest open dissent in decades, betting that inflation isn't finished. Chapter 2, the defiance. Wall Street ignored them, closed a 4th straight winning month, and big tech committed $725 billion to the AI build-out, with Amazon's 37% cloud growth as the first receipt that the bet can pay. Chapter 3, the nerves. While stocks slept this weekend, crypto, the only market that never closes, drifted lower, with its fear index stuck deep in the red. Around $63,000 for Bitcoin. Fear at 27. 3 chapters, 3 verdicts, and none of them count, because all of it so far is opinion, positioning, vibes with money attached. This week, the opinions meet the evidence. 5 straight days of labor market data climbing like a staircase to Friday's jobs report, the one number with the power to crown a winner in the Fed's family fight. Weak jobs and the dissenters lose their case. Hot jobs and the hike goes from threat to schedule. You don't need to trade any of it, you need to understand it. Let's walk the week. And first, the starting line. Where everyone stands this Sunday morning. Stocks come in confident. Records within reach, 4 straight winning months on the Dow, and the AI trade freshly validated by earnings. Priced into that confidence is a simple belief. The economy is cooling gently, the dissenters are wrong, and the next Fed move, whenever it comes, is a cut, not a hike. Crypto comes in nervous. Bitcoin spent the weekend drifting near 63,000, and the fear and greed index sat at 27, fear territory, even before the week's data. The market that trades through weekends has been telling anyone who'd listen that it doesn't share Wall Street's confidence about the price of money, and cash comes in paying 3.5% risk-free while everyone else argues. Remember that. It's the quiet winner of every scenario this week. One more thing waits at the starting line. Sunday evening, 6 p.m. Eastern, stock futures reopen. That's the first moment the frozen Friday tape gets to react to everything the weekend produced. If Friday's calm was hiding anything, tonight is when it starts to show. Now the map. This week is a staircase, and every step is labor data. Monday, the ISM manufacturing report, a health check on the factory economy, and the appetizer. Tuesday, job openings, the JOLTS report. How many help-wanted signs are still hanging in America's window? Openings falling means the labor market is loosening. Dove fuel. Wednesday, the ADP report. Private payrolls, the unofficial preview of Friday. Markets trade it, sometimes hard, even though it's famously bad at predicting the real thing. Thursday, weekly jobless claims, plus a Fed official. Musalem of the St. Louis Fed speaking after the close. Every Fed voice this week gets parsed for one word, September. And Friday, 8:30 a.m., the July jobs report, the number. Here's why this one is bigger than usual. Last month's report was a genuine shock. The economy added just 57,000 jobs, when economists expected 115,000. A miss that size is either a fluke or the start of a trend, and nobody's known which for a month. Friday answers. The consensus guess for July, around 100,000 jobs, with unemployment holding at 4.2%. So let's build the verdict table, what each outcome actually means for the fight we've been tracking all week. Scenario 1, another weak number. 2 ugly reports in a row stops being a fluke. The dissenters' case, that the economy is running too hot for cuts, collapses on the spot. Rate cut bets come roaring back, stocks likely celebrate, and the 3 officials who voted to hike go quiet for a while. The irony, bad news for workers reads as good news for asset prices. That's the upside-down logic of a rate fight, and it never stops being strange. Scenario 2, a hot number, say, well above consensus, with wages accelerating. Now the dissent becomes the mainstream. A September hike goes from tail risk to base case. The market that's priced for perfection meets the thing it's not priced for. And suddenly, crypto's weekend nerves, the fear at 27 while stocks partied, look less like paranoia and more like the early warning. It's been twice this week already. Scenario 3, boring. Right around 100,000, unemployment steady, wages tame. The fight stays unsettled, September stays a coin flip, and the whole argument rolls forward another month. Markets hate admitting it, but this is the most likely outcome, and it's the one nobody makes videos about. The honest position, nobody knows which scenario prints. Not the Fed, not Wall Street, not this channel. What you can know right now for free is exactly what each outcome would mean the moment it lands. That's the difference between reacting and understanding. By Friday morning, you'll have both the map and the number. Almost nobody watching the news will have the map. So how do you actually use this week? Not advice. A viewing guide, 3 rules. Rule 1, watch 3 numbers. Friday, not 1. The headline payroll number gets the headlines, but the Fed's dissenters care just as much about the other 2. The unemployment rate, 4.2% is the line to watch, and wage growth, because wages feeding inflation is the whole hike case. A soft headline with hot wages is not a dovish report, no matter what the first headline says. The full picture takes 3 numbers, and now you know which 3. Rule 2, don't trade the print. Jobs Friday has a signature move, a violent reaction in the first 30 minutes, and then, more often than you'd believe, a full reversal by lunch once the market reads past the headline. People who trade the 8:30 spike are usually donating money to people who waited until 10. If this week tempts you to do anything, the highest percentage move for most people is precisely nothing, watching with your cash still earning 3.5% while it waits. Rule 3. Use ADP Wednesday as a rehearsal, not a forecast. It'll move markets for an hour, and it predicts Friday about as well as a coin flip. It's real value to you, watching how violently the market reacts to a labor surprise on Wednesday tells you how nervous the room really is before the main event. And keep one eye on the tape that never closes. Crypto called the nerves before the weekend, and it'll be trading straight through Friday's print while your stock app is still loading. If Bitcoin lurches at 8:31 on Friday, that's the fastest honest read of what the number means before a single television strategist finishes a sentence. The through line for your money hasn't changed all week. Know what you own, let patience get paid, and treat the loud days as information, not invitations. Weeks like this one are why we watch daily. Nothing here is financial advice, it's the map. What you do at each landmark stays your call. This week's question, and I want specifics in the comments. Everyone has a view on the Fed fight by now. So, what number on Friday would actually change your mind? 50,000 jobs? 200,000? What would make you switch sides? If no number would move you, that's worth knowing about yourself too. 2 pills for jobs week. Blue pill, it's 1 report. The economy bends slowly, the Fed moves slower, and whatever prints Friday, your 30-year plan doesn't care. Stay the course, ignore the fireworks. Honestly, usually right. Red pill. This is the week September gets decided, and September decides the price of money into next year. Watch Friday like it's earnings day for the entire dollar. Position small, stay liquid, and let the impatient pay you for your patience. Blue or red, and give me your Friday number. Tomorrow morning, the staircase starts climbing, and we'll be on every step. Monday's factory check, Tuesday's help wanted signs, all the way to Friday's verdict. 1 episode every morning, so the timeline reaches you before the market does. Subscribing is the one click that makes sure it keeps showing up. We watch the forces. You keep the decision. The timeline keeps moving. We will see you in the next one.